Hey, what's going on, guys? Jeff here, back again with another video. And Trump is just inking new trade deals in Malaysia and Southeast Asia, somewhere very close to me. Now, the ripple effects is going to be going way beyond just politics. We're going to be breaking down what all these deals are going to be talking about and what the market is going to be expecting. And also, I'll be telling you guys what you can possibly be doing right now and what you should be looking right now. So let's dive in. Now, Donald Trump finalizes the trade deals with Malaysia and Cambodia. So part of this larger move is definitely going to be reducing US reliance on China, right? Malaysia's opening its market to American agriculture, digital trade, and critical mineral and rare earth. Now that's going to be huge for chips, EV, military tax. US basically just wants this China-free supply chain, and I think Malaysia is going to be stepping up to the plate in order to fill that gap. Now, of course, China is not going to be some pushover, right? China's not going to be sitting still, waiting to get attacked. At the ASEAN summit, Beijing is already pushing its own trade narrative to ensure that they can maintain the same level of influence across Southeast Asia. So, Southeast Asia currently is just this big trading chessboard that we are all looking at. Now, of course, the market loves anything that sounds like less tension. So the S&P 500 ticked up. The optimism spread across multiple tech and industrial sector. Now, of course, these are not going to be your full trade deals, right? These are just frameworks, and traders are generally just going to be really, really optimistic, cautiously optimistic. Now, the US is already clearly redirecting their supply chains towards Malaysia, Vietnam, and the border of ASEAN region. Now, this is going to be very, very bullish for your Asia, excluding China ETFs. But of course, this will be tough for the Chinese exporters because investors are quietly rotating out, preparing for their next move. So why this might actually matter to you is because this is starting to reshape entire industries. Okay, so number one, we have to talk about the critical minerals and semiconductors. Malaysia could become this refining hub, reducing dependency on China's rare earth monopoly. Now, number two, agriculture. US just basically opened this new export route to Southeast Asia, which could boost US farm and commodity stocks. And for people who do not know about the whole agriculture fight that China and US just went through, China decided to not buy any soybean from US, which clearly destroyed the bottom line for a lot of farmers in the US side, which is why agriculture is going to be a very, very big play in this upcoming trade deal. Number three, the China plus one strategy. Companies want backup at manufacturing bases, and the ASEAN nations are ready to grab up those capital. So now, of course, the question is going to beg, what can you actually do in this current scenario? So of course, I'm going to be talking to you guys about the short term, the medium term, and the long term, right? So short term wise, I think maybe if you are going to be looking at your exposures, I would say trim some of your exposures to company that's heavily tied to any of the Chinese exports. Okay, I'm not talking about Chinese tech. I'm not talking about Chinese manufacturer. I'm talking about Chinese exports. So that's going to be very, very important. Look at your own portfolio. If you think that you are too heavy on Chinese exports, maybe do a little bit of a trimming for your exposure and maybe do a little bit of diversification into some Asia Pacific, excluding China ETF. For people who are safer on the place, I think this is not going to be that bad of a shout. Now, you might also want to be looking into rare earth and mineral plays because Malaysia could be unlocking a brand new supply. So I think generally I'm just going to be keeping an eye out on US agriculture stocks as well. Those are going to be the serious players because they have been beaten down in the recent months due to the whole entire situation with US and China. Now, let's get into the medium term. We have to be looking at manufacturers, right? All the manufacturers are shifting over to the Southeast Asia. I think semiconductors, your logistics, renewable infrastructure, all these are going to be all in focus. Now, you should follow the money and follow the execution. If Malaysia delivers on its rare earth promises, I think this story is going to have some legs. And not only is it going to have some strong legs, it's going to be running really, really far. So do remember, what I'm telling you guys is basically just a map. It's not a recommendation. Profit often hides in execution. which means that if I'm going to be telling you about everything down to the T about how everything is going to be happening, but if you are not doing it at the right time, you're still going to be losing money. So whatever would that mean for you? Now, market is probably just going to be seeing three possible paths at this moment. I'm going to be giving you three different scenarios, okay? So right now, the first scenario is going to be smooth sailing, right? Everything is great. Deals are formalizing. Your supply chains diversify well. Tech and industrials rally up. That's going to be the best case scenario, okay? Which means that there's not going to be any more tensions in the air. All the countries are going to be fine. There's going to just be some underground tensions that's not going to be out in the headlines on CNBC. Now, scenario number two, we're going to see a little bit of a slow burn. Okay, that means that all your trade talks are going to be dragging out, which is something that we have been seeing, right? Since May of 2025, we saw that the trade talks have already started to deteriorate since then, and it has been dragging until today. So if your trade talk starts to drag, your execution would also lag behind. That way, market generally would stay flat. And during that kind of time, please get out of the derivatives because you are going to get burned on theta decay. Now, number three is going to be mass escalation. Now, what I'm talking about mass escalation is that China comes out and retaliate to this whole entire thing. China just say, okay, you know what, US, you are now stepping onto a soil that is too near to my heart, and now I have to come out to fight back. If China is going to start retaliating, what's going to happen is that China is going to be slapping some serious tariff on US. And this is not going to be like how Trump is slapping tariffs on China, because China is going to be slapping back way harder. And what is going to be effectively meaning is that global equities as a whole is going to get beaten up because of these two giants fighting each other. So, of course, right now, I think optimism is dominating the whole entire market. But let's be honest, one headline is all it takes for optimism to completely vanish. One headline of how the banking industry is not going to be good, one headline on how the export market is not going to be good, one headline on how the trade deals is not going to be good. That's all it takes for optimism to completely flatline. So, the US Malaysia deal isn't just about trade. Let's be honest, right? It's not about trade. It's not just about politics. It's about reshaping the next decade of global supply chains. Right now, we have a very, very rare chance of something happening, which is opportunity and uncertainty both rising at the same time. So all you can actually do right now is just stay nimble, stay informed, and maybe just watch ASEAN a little bit closer. Because somehow or another, I think that the next manufacturing boom might be just around the corner. Anyway, that's all I have for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Subscribe and peace out.